Hi, welcome to the video day. It's 22nd of September. It's Thursday. In today's video, we're going to give our updated outlook and forecast for the USD. We've got plenty of USD pairs to look at. We'll go and take a look at them in just a moment. Now, in terms of our view on the USD, just been heavily bullish for months. Now, the dollar has seen a really big move to the upside. Are we going to get a trend change anytime soon? I personally don't think so. Probably going to pull back or correction in the short term. That'll be a buying opportunity. The dollar is supported by several big bullish fundamentals, which are not going to turn around anytime soon. It's not just about a hawkish Fed. Now, in terms of the big bullish fundamentals we think will drive the dollar higher on all the levels of support and resistance in the pairs we really like. We're going to go and take a look at them right now. Just before we do so, though, if you want to learn our trading strategy, look at all our trading techniques, and also check out our daily technical sentiment analysis of 14 FX pairs, you can do so on the link beneath this video and get live access to our member center. You can also join our free mailing list as well. Join our Facebook group of traders, and finally follow our Facebook page. Right, let's go and take a look at the charts. Right, we're on our first chart, which is USD CAD monthly. I'll go to the daily chart in a moment. In our video last week, we picked this out as our favourite pair in the majors, and it remains our favourite pair. Now, in the last video, we wanted the USD to push away from the 130 level, pushed up really nicely to 135. That was our first target. It's been hit. Now, in terms of this move, it's not done. We think we'll get back up to these candles over here. So basically the 140 level. We may even overshoot to the tail here and the tail on the left at above 146. Now, in terms of, before we look at the individual pairs, I just want to summarize quickly in about 5 minutes the big bullish dollar fundamentals. Then we'll talk about hawkish Fed. Everyone knows the Fed are hawkish, that's dollar bullish. But there's other fundamentals that will support the dollar. And I'm really interested in stock markets at the moment to help the dollar on its way to the upside. Before I look at stock markets, this chart comes from the global, the chart is the Global Sales Manager Index. It comes from World Economics. It's a forward-looking indicator in terms of the health of the global economy. You can see the title here, Global Economy in Recession, below the 50 line. We're going to stay below the 50 line and head south, okay? Now, in terms of this August 2017 box here, it means nothing. I just must let my cursor there when I downloaded the chart. Now, if you've got a global economy slowing up and in recession, that is historically bullish for the USD. I'll discuss that in a little bit more detail in a moment, but just want to go and look at stocks. Now, in terms of the S&P, we saw that huge rally there. That rally, and you can see my notes, was basically driven by stimulus. Fed printed tons of money in response to COVID, powered the rally, okay? Responsible for 90% of the rally, okay? So big percentage. Now, in terms of what we know now is stimulus obviously has stopped, and the Fed are involved in QT, which is quantitative tightening, i.e. reducing their balance sheet and taking dollars out of circulation. Well, if we take into account that 90% of that rally was Fed stimulus, we should basically, in my view, reach these levels that I've indicated. So we've seen some downside, but plenty more to come. Okay. Now, in terms of the Fed, a lot of people thought, the Fed would basically, not want to see the S&P fall. They want it to fall. And I'm just going to go through this view here. It comes from Steve Blitz. Basically wants Fed wants a sharp downturn in equities. Why equities? Because this has been an asset cycle, not a credit cycle. Okay. And rich assets are this cycle's source of economic distortions. In plain English, that means that the asset bubble is inflationary. It needs to be deflated. Okay, just one more chart in terms of stocks. There's a good few in the weekly report if you want to go and check them out why we're bearish. This one here is a comparison between 2008 purple line, 2022 the blue line. It comes from the market here. You see 2008 full. Will we play catch up? You can see the correlation between the two time periods. I just think stocks could get a really big hit, which will really help the dollar to the upside. You see a lot of forecasters saying stocks are not overvalued. They are still a bubble. Okay, so that's another reason to be dollar bullish. I've shown this chart before. It's the dollar smile. US recession or synchronized global slowdown means US dollar goes up. We might get a US recession. I think US probably will, but it's not guaranteed. But we've certainly got a synchronized global slowdown. And you've got to think about why that is bullish for the USD, because USDs fund the global economy. So when you've got a really buoyant global economy, lots of dollars are going out in loans, and 80% of the loans granted in the global economy, even by foreign banks, are against the USD. So the USD is sold for other currencies. Have a slow up, not so many loans are granted. You've got higher interest rates, which means that's prohibitive as well in terms of loans granted. And you've got basically loans getting called in. Okay, so really big bullish fundamental. If you believe the global economy is going to turn around soon, then sell the dollar. Obviously, we don't think that's going to happen. Now, in terms of just final conclusion, from JPM's Meera Chandan, sees dollar strength continue, pointing out upside data surprises. That's in the US economy. Okay, it's not doing great, the US economy, but it's doing better than most other major economies, isn't it? And yeah, data is surprising to the upside. So the US economy resilient against other economies. European currencies, euro, UK, pound, other European currencies. Financing concerns around deficits. The energy hit, it's been massive. Okay, broadening Asian export weakness, that really just shows the global economy is slowing up. Signs of dollar shortages. You haven't got so much funding going into the global economy, and you've got QT, so dollars going out of circulation. Okay, so that's just a quick review of why we are so bullish of the dollar. They're really big fundamentals in our view. You can throw another one in actually, which is geopolitical concerns. Russia, Ukraine. Russia up the ante, obviously, by mobilizing troops. Neither Putin or the West wants to back down. The conflict could get worse. And there's plenty of other geopolitical concerns as well, like China, Taiwan, numerous problems in the world. We've got a really gloomy outlook going forward, but that is going to be bullish in our view for the USD. Right, let's go back to the pairs, and obviously USD CAD first. Right, first chart USD CAD. For anyone new to our videos, as you can see, we do not use complicated technical analysis at all. It's just simple support and resistance. We'll keep an eye on volatility and momentum as well. We've already got a bias from the sentiment and fundamentals behind the chart, so we keep the technicals simple. Just focus on big levels where we think there'll be big order flow around. Now, in terms, we're always working off a daily chart. We always do our orders in advance. Okay, now in terms of this pair, nice break here away from 130 puts us long, and we've stayed long since the last video. We did 150.50 bank on the way up. I took some profit and put it back in. Now we are a little bit overbought in the short term. So how would you play this one? I think if you went through this tail high, I'd go with a stop behind this level. Otherwise, take a dip back to the level with a stop behind the 133 level. You can see my levels on the chart. Okay. Now, in terms of the CAD and all the commodity currencies. The reason why we like them so much is because in a global economic slow up, they get hit really hard. Obviously, commodity prices fall. You can see what's happened to crude oil, for example. Okay, so this one going well. We'll see if we can continue to the upside. AUD, USD. Now, in terms of AUD USD, been short of this one for a while from 70.90, and now we're down 66.27. I did these charts earlier. USD CAD hadn't moved much. I'll check AUD USD in a moment, but yeah, in terms of 67, that should hold any rallies. Okay, my own view is at the moment I've got my stop behind this level here. Okay, you could sell a rally back to 67, stop behind this level. You can see my stop at the top of the chart. Or if we continue to the downside and go through the low, you could just sell with a stop behind 67. 67.30 I think would be a good level. We're looking for 65, then 60. Okay, so potentially 600 more pips on the downside. Let me just go and have a look at, well, there's USD CAD, not too much change. AUD USD, see what we're doing tonight. Yeah, we've come back a bit at this moment in time. So I'd say, yeah, back through 66 if you wanted to come in fresh. We'll see if we top out in to the 67 level. Sorry, the fundamentals for the Aussie, obviously a commodity currency like the CAD, but I think another big bearish fundamental is its huge exposure to China. And I didn't do it in this video, but China's got huge problems. Okay, major trading partner way on the Aussie. Now, in terms of the next chart I want to do will be Euro USD. All right, we're on Euro USD, and we have a short position. Our latest one from this red candle here at 1080. We came down nicely, bit of a rally, red, big red on the Fed, and now we're blue, or we were blue this morning. Now, in terms of playing this one, if we got up towards the 99 level, you could sell off the level on weakness, or if you got through 99, just sell back through the level, stop behind this double trend line here. I've got mine 1020, you can see at the top of the page. So rally would be a selling opportunity. I don't see this red being taken out. It's a really big definition candle. In terms of what about if we break lower, take a break of the two tails below the 98 level, I'm going to say 97.70, just get away from the level, then your stop could be behind 99. This moment in time I'd say 99.30. We've got a lot of downside in our view, 96, then 90. Okay, now in terms of these projections, they're off the monthly charts and also various economic valuation models, so potentially a lot of downside. Now in terms of the euro zone, it's just not in good shape, and I think forecasters are a little bit too bullish on the zone. It's going into a long and deep recession, and the ECB raising interest rates is not hawkish. In our view, interest rate differential favours the USD. Also, I think interest rate rises could cause a debt crisis in the poorer nations of the zone. They're going to hammer economic growth, do nothing to bring down inflation. Also, you've got political problems brewing in the zone. You've seen probably in the news Hungary's clashes with the EU. There'll be another clash soon with Italy. If Italy elects a centre-right government, which looks likely they're anti-EU. So just a huge amount of problems, limited upside, a lot of downside. Where should we go next? Let's go to NZD USD. I still like the look of this trend. This has been a nice smooth trend to the downside. We've been holding this one for a few months, and yeah, it's basically come down from 63.70 entry to 58.53, so it's like a really decent profit. Now in terms of how would you play this one, I think any rallies back towards this level are a sell, okay? Or you could take a break of the low. If you took a break of the low, 58, so say 57.70, I would have the stop initially behind the first level resistance. If we started to move down strongly, I'd put it behind 59. Now I've got a target of 55. I'm going to extend that to 50. Now, in terms of the commodity currencies, the majors, we did them all as like treating them as one trade. Sometimes if you pick the best of the three, in your view, it's the one that doesn't move. So we just had a bigger allocation on the CAD. The NZD actually did the best and has got our smallest allocation. But yeah, it's a decent rundown for us in all the commodity currencies. Now, in terms of the next pair I want to look at, right, we're on USD Swedish krona, which has been a favourite of ours for a while. It's a nice trending pair and got a nice move up there, got stopped, then back up. We've hit the monthly target I was talking about in the last video at 11. So what we've done is we've cut out 50% of our trade. Now, in terms of this one, you've got nothing to aim at on the upside on the monthly charts. Now, I think, look at the economic fundamentals, we go to 1150, maybe even higher. Okay, so I'm keeping a smaller trade in. If I was coming into this fresh, I would wait for a retracement. So if we came below the 11 level, you could look to key off this level here. Okay, so get through, steady up, then you could buy. But coming in fresh, I wouldn't do it. Okay, but we want to keep a small trade in. We still think there's more potential. This one's treated us kindly. Biggest allocation in euro proxies, USD CZK. Now, in terms, nice push up. We're going to 26. So basically, I'm trying to calculate what that is. It's about up here somewhere. It might go even higher. Czech krona, Czech Republic, a lot of problems. Huge exports. Most of output goes to Eurozone. Obviously, energy is really heavily reliant on Russia. It did do a lot of business with both Russia and Ukraine. That's obviously gone. You see in Prague, there was huge protest a few weeks ago. So this one, a lot more upside potential in our view. I didn't look at what USD SEK was doing tonight. It's doing all right. What about USD CZK? Again, doing okay. Now, in terms of the next pair I want to look at, right, last pair, USD ZAR. This one has been a big one for us. We only have a small position on it, but it's done really well. ZAR is very volatile with USD ZAR. ZAR is an emerging market currency. Global slow up. Emerging markets always get hit the hardest, and it's a commodity currency as well. Nice run up. Did get clipped out on stop. I put my stop close behind the 1750 level, probably too close, just taken out. That's the way it goes. Just come back in above the level. If you wanted to play this one, just go above, go to a new high. You don't need to stop back here. You can put your stop behind the trajectory line, behind the tail. Plenty of upside. I'm going for 19. And if I bring up the monthly chart, I want to, 19, which is just basically that tail, and where this tail did eventually exhaust. But the way it's looking at the moment, the way things are, we could get even higher than 19. I'm just really bullish of the USD. Now, in terms of, just for anyone new to our ideas, if you're a retail trader, if you focus on big moves with small positions, you can stay outside of the noise. A lot of traders want to go for big positions and looking at shorter time frames. I just think the market is so volatile, so spiky. You're better off small positions. They can make you a lot of money with sensible stops. We'll see where the USD goes. I'll be doing a general video at the weekend, but you will get a correction, I'm sure. Well, you obviously will get a correction. You always do, but corrections will be buying opportunities. This trend has got a lot further to run. The global economy is in bigger trouble than any time I can remember it. Okay, the US dollar will, in our view, probably bubble up into the end of the year. We'll see what happens. We'll be back at the weekend, but that's the video for now. Thank you for watching. Take care and have a good day.